Good day everyone. This is our daily top 5 gainers and top 5 losers analysis video for June 20, 2019. My name is JC De Guzman. We will be discussing FGEN, GTCAP, CHP, PXP, GSMI, JGS, PNB, MHC, PLC, and PRMX. I'm going to tell you my technical analysis, follow it up with my overall sentiment and recommendations. And everything that I'm going to say here is geared for short-term trading purposes. Do not apply the pieces of advice that I will give you for long-term investing. We have a different platform for discussion when it comes to long-term investing, and that's exactly the tab that you see next to the short-term trading tab. We also have a forum where you can ask for my pieces of advice for any of the 30 index stocks that we monitor for your long-term investing or long-term investment. Shall we begin? Let's start with FGEN, an index company. FGEN's closed today at 25.45. The support is at 22.5. Resistance is at 26.10. It's already moving up. It's still moving above the 10 SMA, and I am seeing a perfect bullish alignment among its three simple moving averages. The MACD line also maintains its position above the signal line. I like the consistency of the foreign investors in terms of registering a daily net foreign buying for FGEN. For example, the foreign investors have been registering a daily net foreign buying for more than 12 trading days already. Also, the upward momentum is already very strong, as I can read it on the DMI histogram. RSI is about to touch the classical overbought level. So, reminder for those who have had FGEN for short-term trading purposes, let me assume if you entered a new position last May 21, that was the day when the conditions of our 10 SMA and MACD combination were recently met, it's best that you monitor the price closely once it touches the resistance near 26.10, 26 to 26.10. Why? Because it's not impossible for the traders to consider doing a massive profit taking within that area. By the time RSI should already be playing, will have already been playing or should be already playing inside the classical overbought level. I'd like to make it clear that RSI hitting 80 and above does not automatically mean that you should sell. There are many cases, and you've heard me highlight these cases in my previous videos, wherein RSI has been trading inside the classical overbought level for how many trading days already, yet the stock continues to move higher and higher and higher after every trading day. So it's not necessarily a sell signal once the RSI hits 80 and above. It's not necessarily a buy signal when RSI hits 20 and below. Okay, classical oversold level. So then how do we know if it's time for us to sell? Well, obviously, if you're a new subscriber, it's not yet that obvious, I know. Here, once our trailing stop loss gets hit, that's the time to sell. Okay? If you are pretty new with that terminology, please read the entire quick start guide. It's on your dashboard. Okay, so there you go. If you have had FGEN for a while already, sell once your trailing stop loss gets hit. Yes, you still have a data-driven reason to top up. For those who are planning to enter a new position, I suggest that you consider you check your reward to risk ratio first before you do a test buy. Okay. Let me show you the resistance area of FGEN once it breaks above 26 to 26.10. So it's at 28.70, aligned to the 61.8% of the up Fibonacci extension, 28.7. So if you're going to calculate your reward to risk ratio, you can use 22.5 as the support And you have two options as to what resistance level are you going to use in the calculation of your reward to risk ratio. It's either 26.10 or 28.7. Okay. All right. So if you're happy with your reward to risk ratio, then that's the time that you should regard or consider doing a test buy. Top up or do a test buy at what price? This is what I'm going to show you next. The dominant range based on the trade and volume distribution chart of FGEN is between, hold on, let's double check where it closed today, 25.45. So the dominant range that I see here is between 25 to 25.5. It's in favor of the buyers. That's the range where you should position yourself if you're planning to enter a new position or to top up on your current holdings on FGEN. Okay, I am bullish on FGEN. Next, GTCAP, another index company. It closed today at 960 pesos per share. Support is at 77.92. Your midterm support is at 900. Your resistance is at 1042. GTCAP is enjoying its position above the 10 SMA. I am not yet seeing a perfect alignment among its three simple moving averages. Perhaps once the price inches much closer to the resistance at 1042, that would make the three SMAs aligned in a perfect bullish position. Nonetheless, MACD is moving above the signal line. Therefore, the conditions of our 10 SMA and MACD combo remain true. RSI is still distant from the classical overbought level, thereby giving GTCAP more chances or more space to dance closer to the resistance at 1042. The upward momentum is not yet very strong, although the bulls are in control. But upward momentum, again, is not yet very strong. Okay, so let me just delete this one. Let's take a look at GTCAP's trade and volume distribution chart. The dominant range is between, let me zoom it first so you can see it clearly. Okay, today's last price is also the intraday high. Take note of that. Today's dominant range is between 950 to 960. And there's another dominant range as well. It's between 938 or 940 to 945. So what does that mean? If GTCAP will open by the next trading day at a price lower than 960, might as well wait between 940 to 945 if you are planning to top up or enter a new position. Okay? But if it starts at 960, 961, still you can position at 950 to 960. Okay? Anyhow, that dominant range is in favor of the bulls, the buyers. You have a data-driven reason to top up and to enter a new position, provided you are happy with your reward to risk ratio. So that last part is for the new entrants, those who are planning to enter a new position on GTCAP. I am bullish on GTCAP and it's more likely to continue inching at a higher price. The third stock in our list is CHP. It closed today at 2.84. Support is at 2.33. Resistance is at 2.88. Once it breaks above 2.88, it will make 3.61 as its next historical resistance. I am not yet seeing a perfect bullish alignment among its three SMAs. Nonetheless, I think we will be seeing one once the price breaks above 2.88. The 50 SMAs is about to cross above the 200-day SMA on my daily chart. In addition to that, MACD is still moving above the signal line, thereby making the conditions of our 10 SMA and MACD combination true. RSI is still far from the classical overbought level. While the bulls are in control, the upward momentum is not yet very strong. I also like the bullishness of the foreign investors for the past few weeks on CHP, but their buying appetite in terms of registering a net foreign buying on a daily basis has diminished a little bit in the past 2 to 3 weeks. Nonetheless, for 2019 year to date, I think there are still net foreign sellers for CHP. Okay? Let me show you the trade and volume distribution chart so we can identify the dominant range for CHP. Take note that the closing price of 2.84 is also the intraday high. The dominant range of CHP is between 2.75 to 2.84 in favor of the buyers. You have a data-driven reason to enter a new position and to top up. Again, for those who are planning to enter a new position, don't forget to calculate your reward to risk ratio first. Your reward to risk ratio, okay? Right now, next we have, I'm bullish on CHP, and it's more likely for the price to break above 2.88. I don't see any sign of a weakening bullish momentum based on today's data. Next, we have PXP. This stock closed today at 8.26. Support is at 6.78. Resistance is at 10.05. Unfortunately, PXP is still showing us a perfect, or the three simple moving averages of PXP are still showing us a perfect bearish alignment. Okay, and MACD fortunately managed to register a golden cross above the signal line today, and also the price already moved above the 10 SMA. So if you are looking for stocks that don't have volume-related concerns that have met the conditions of our 10 SMA and MACD combination, then PXP is one of those stocks that you should consider buying or trading. Okay? So I also like the fact that the positive DMI is already moving above the negative DMI. RSI is pointing towards the northward direction, and it's still in the neutral territory. So giving PXP more chances to perhaps break above one or two resistance levels. But let's not keep our hopes too high. Let's for now we see a data-driven reason to enter a new position on PXP. Even if you will calculate your reward to risk ratio with 6.78 and 10.05 as your support and resistance levels respectively, I think you will still get a thicker, a better, or a more attractive potential reward than your potential risk. So this is really a good candidate to enter in, to do a test buy on PXP. Okay, let me show you PXP's trade and volume distribution chart. With the closing price of 8.26, we can identify that the dominant range is between, it's quite challenging to identify one because it looks like I'm seeing two dominant ranges here. One between 8.25 to 8.35 and another one between 8.08 to 8.2. What does that mean? If PXP will start the next trading day at a price close to 8.35 but not lower than 8.3, you can position between 8.25 to 8.35. But if PXP starts at a price lower than 8.25, I would remind you, I would like you to consider postponing your plan to enter a new position so you can continue monitoring and catch a better position by doing a fresh trade and volume distribution analysis. If you are using First Metrosec Pro, you can log into your account at First Metrosec Pro and click on the Volume Review tab. If you don't know how to do that yet, you can post a request in our private clients forum and I will gladly publish my fresh trade and volume distribution chart together with its statistics in our private clients forum. Bottom line is I am bullish on PXP, and we have spotted this the satisfaction of the conditions of our 10 SMA and MACD combination. So you can do a test buy on PXP. Make sure that you know where your trailing stop loss is, because there are times when we are bullish on a stock but the stock does not care how much data we have used to derive to that bullish sentiment. Sometimes it contradicts our data-driven bullishness toward the stock. At least when that happens, we're not clueless. We know what to do, whether the stock decides to continue to go higher or whether it decides to retreat a bit from where it came from or from where it was in the past few trading days. Okay, trailing stop loss. Next, we have GSMI. This company closed today, this stock closed today at 54.95. Your support is at between, the support is between 40, support is at 44.50 44.5 in confluence with the 61.8% Fibonacci retracement, up Fibonacci retracement. Now for the psychological resistance, I have plotted an up Fibonacci so we can spot where the 61.8% up Fibonacci extension is located, and it is at near 70.5. That is our psychological resistance for GSMI. I am seeing a perfect bullish alignment among the three simple moving averages of this company, and it managed to increase the distance above the 10 SMA. Also, MACD, as expected, continues to move higher than the signal line. On the other hand, RSI is already playing inside the classical overbought level. This is an indication for those who may already have GSMI to keep an eye. Keep an eye on this company because at any moment from now, a massive profit taking may be considered by those who have had GSMI in their portfolio already. The upward momentum remains very strong because of the ADX score of 51 points and above, 51 points or higher than 50 points. So let me show you GSMI's trade and volume distribution chart, considering that this stock closed at 54.95 today. The dominant range of this stock is between 54 to 54.95. The closing price is also the intraday high of GSMI. The dominant range is in favor of the buyers. You have a data-driven reason to top up and to enter a new position. For those who are planning to enter a new position, I suggest that you use the psychological resistance at 70.5 as your basis for the resistance area. But, there's a but, you have to consider the fact that RSI is already playing inside the classical overbought level. Okay? So, if you would like to risk it, then you can enter a new position and do a test buy. It's all the more that you should do a test buy only and not buy GSMI in a one-time, big-time fashion because, again, of the position of its RSI. Okay? I remain bullish on this company, by the way. Next, JGS, another index company. It closed today at 64 pesos per share. Support is at 56.20. Resistance is at 69.60. I am already seeing a perfect bullish alignment among its three simple moving averages on the daily chart. JGS is already trading above the 10 SMA, while the MACD signal, or the MACD line, rather, just continues to move higher than the 10 SMA. So, let me show you, let me delete this line. The upward momentum, or the bulls are in control, but the upward momentum cannot be classified as very strong yet. Perhaps once the price touches or goes above 67 to 68, maybe we will see the upward momentum entering the official strong category when that happens. Okay. RSI is still within the area of the neutral territory, so there's still more room for JGS to try its luck to inch closer to 69.6. And going to its trade and volume distribution chart, knowing that it closed today at 64 pesos per day, which happens to be close to its intraday high than to its intraday low, I would say that the dominant range is between 64 to 64.4. 64 to 64.4 in favor of the buyers. If JGS will start at a price lower than 64, I would suggest that you position your trade between 63.3 to 64. 63.3 to 63. 63.3 to 64 pesos per share. Okay? The dominant range, the first one that I have mentioned, is closer to the intraday high than the intraday low. Okay? So there, you can still do a test buy or top up onto your position for short-term trading purposes on JGS. Next in our list is PNB. PNB closed today at 49.5. It's at the brink of closing below its support at 49 Resistance is at 61.55. If it breaks below 49.30, it will make 43.3 as its next immediate support level, followed by 38.70. These are the horizontal lines that you can see on the chart that I am reading right now. MACD unfortunately just continues to move lower than its signal line, and it's been a while that PNB has been trading in a downtrend channel. I would say since the last week of May this year. Also, I'd like to mention another factor that contributes to the bearishness of PNB, or the bearishness of my overall sentiment for PNB, is its DMI or ADX score, average directional index. That's what it means by ADX. ADX score of 27% or 27 points. Officially, is already moving in a strong downward level or strong downward momentum. Okay, RSI is approaching the classical oversold level. So let's see if PNB will respect the support at between 49 to 49.3. Let's see if it will rebound. What if it rebounds? What do we do then? Well, for us not to be a victim of dead cat bounces or DCBs, I suggest that you wait for the appearance of the 4-point criteria that I always mention in the previous videos. And what are those 4-point criteria? The last candlestick should be green. Second one is volume should be green, and it should be at least higher than the 50% of the stock's 10-day volume average. Third one, the volume weighted average price or VWAP should be or the last price should be higher than the VWAP. And lastly, the dominant range should be closer to the intraday high than the intraday low. When those four things are present, once the price touches or respects 49 to 49.3 as a support level, then you can do a test buy. Perhaps that's a signal, not perhaps, but it's a technical signal of the traders wanting to respect or deciding to respect the support between 49 to 49.3. But only when that happens. I'm speculating. I'm giving the scenarios and what signals to look out for, okay? I'm not saying that will certainly happen. Remove the word certainly. Okay. PNB. So I gave the dominant range already. 49.5 to 50. That's the dominant range. 49.5 to 50. Okay, for now I am bearish on PNB. Next, MHC. This company closed today at 0.65. Support is at 0.65. Resistance is at 0.83. As early as now, I'm telling you that I am bearish on MHC. Don't wait for the stock to break below 0.65 because that's more likely to happen. Especially when these traders see no sign or see no reason why they should buy the stock at a price higher than 0.65. But there's another side of the story. Despite my initial bearish sentiment for MHC, I'd like to mention also that it's not that I'm contradicting my own sentiment, but there's a possibility also for MHC to respect this support at 0.65. How did I say so? Take a look at the size of today's volume. Yes, the price descent from the previous trading day's closing price of 0.69 to today's closing price of 0.65. But apparently, today's traders did not have that much interest to sell down on MHC, because if they really wanted to sell it down on a significant level or by a significant degree, we should be seeing a volume that's more or less close to the size or to the height of the previous trading day's volume. But it's nowhere near 50%. It's not even 50%, close to 50% of the previous trading day's volume. So there was this lack of appetite to participate in the sell down of MHC's price today. So we'll see by the next trading day if the traders of MHC will respect the support at 0.65. Well, in a way, it's contradictory to my initial sentiment. My job here is to present to you what I'm seeing and how I mix and match those signals and how I arrive into different types of assessment or synthesis of these indicators that I'm seeing. On the other hand, the upward momentum remains strong despite the appearance of these two red candlesticks. Well, they are red candlesticks, remember that, but or they are red candlesticks, but remember that they are in a position that is way higher than where MHC was 3 trading days ago. They registered a gap. The price gapped up. Now it's gapping. It's now gapping down. It's filling the gap now. Okay, and of course you cannot expect the DMI to adjust quickly from giving MHC a strong upward momentum to a quick transition to having a strong downward momentum, upward momentum to downward momentum. That's not going to happen overnight. So let's see. Let's see if MHC again, if it will respect the support at 0.65 by the next trading day. Let's take a look first at the trade and volume distribution chart. Today's closing price is also the intraday low. The dominant range is between 0.65 to 0.68 in favor of the sellers. Don't enter a new position. Excuse me. Don't enter a new position on MHC yet. Okay? Don't hurry. We have to watch and see first if traders will respect the support at 0.65. If it breaks below 0.65, set it aside. Look for some other stocks. Perhaps the first few stocks that I discussed prior to MHC. MHC is not the only stock in the Philippine Stock Exchange, as I always say. Okay, next, PLC. PLC closed today at 0.81, support is at 0.74, resistance is at 0.87. It's still moving above the 10 SMA, however, it's already moving below the 200-day SMA. In other words, it remains bullish, technically bullish in the short term, but bearish in the long term on the daily chart. In addition, in favor of the bullishness of PLC, I would say that MACD, I have observed that MACD is still moving above the signal line. So as far as the conditions of our 10 SMA and MACD combination are concerned, that combo or those conditions remain true in the case of PLC as of today's trading. The upward momentum, by the way, remains strong. So perhaps today's red candlestick is only a one-day technical correction. And besides, it closed the previous trading day, it closed at 0.83 and it closed today at 0.81, just 2 cents below yesterday's closing price. RSI is still far from the classical overbought level, giving PLC, thereby it gives PLC more chances to try its luck closer to 0.87. If it breaks above 0.87, it will make 1.02 as its next resistance level. Let's take a look at PLC's trade and volume distribution chart with a closing price of 0.81, which is the intraday low. The dominant range is between 0.81 to 0.82. We don't have much choice. We don't have many choices because only PLC only fluctuated by 3 price points today: 0.81, 0.82, and 0.83. Okay. Anyhow, the dominant range is in favor of the sellers. But still, I am bullish on PLC in the short term. Okay? So you have a data-driven reason still to do a test buy and to top up. Okay? To do a test buy and to top up. Now, for those who are, it's a lot easier for me to advise that you can top up if you have had PLC before today. Okay? Now, for the new entrants, it's quite a challenge for me to say that you can do a test buy. Why? Because the 4-point criteria that we always monitor are not perfectly present, are not all present. You got a red candlestick, volume is red. Did it close above the VWAP? What was the VWAP today? Today's VWAP was 0.82. It closed below the VWAP. The dominant range is closer to the intraday low. So all 4-point criteria are absent. That's why it's a lot challenging for me to suggest to those who don't have PLC but are planning to have it that you can do a test buy. So if only you are happy with your reward to risk ratio, that's the only time that you should indeed consider doing a test buy. If you are not happy with your RRR, then add it in your watch list but not in your portfolio yet. Okay, monitor. Last but not the least, PRMX. PRMX. PRMX Corporation closed today at 2.12. Support is at 1.99. Let's make that 2 pesos per share for an easy reading. Resistance is at 2.4. Okay, so it's already moving above. It's tied up with its 10-day simple moving average at 2.12. Okay, take note that PRMX is showing us a perfect bearish, not bullish, but bearish alignment among its 3 simple moving averages, and it's currently tied up with its 10 SMA. MACD is still moving above. That's a lot of courage. Still moving above the 10 SMA, the signal line rather. The positive DMI is still moving above the negative DMI, although the upward momentum is not yet that strong. Of course, it can't be that strong yet because PRMX or Primex has just been trading sideways since the 3rd week of May. It has just been trading sideways or trading the range between 1.99 and 2.4. It needs more volume, more green volume, a taller green volume bar for it to have more gas, more upward force to break above 2.4. Unless it gets a tall bullish volume, Primex will just continue moving sideways and uh, print a range and not a trend. As I mentioned in my previous videos, I'm more of a trader who loves trading trends instead of trading ranges. Okay, unless we're talking about long-term investing. Okay, PRMX's trade and volume distribution chart shows us that the dominant range is between 2.10 to 2.15. It's almost the entire spread. 2.10 to 10.15 still in favor of the sellers. So don't buy Primex yet. And if you have it, don't top up yet. Hold your position if you have it, or you can preempt your trailing stop loss if you'd like to, because based on my assessment, it's still more likely for Primex to test the support near 2 pesos per share. In other words, I remain bearish on Primex. Alright, so we have finished the video for today in preparation for the next trading day. This is the daily top 5 gainers and top 5 losers analysis video. My name is JC De Guzman, and if you have follow-up questions, don't hesitate to ask in our private clients forum. By the way, those who already bought their ticket for the Evergreen Strategy in Trading the Philippine Stock Market Seminar in Angeles City, Pampanga, I'll see you next Saturday. That will be next week. And there will be some prizes, by the way, in partnership with First Metro Securities. We'll be raffling. There will be a raffle wherein you can win 2,500 worth of an FMETF investment, travel kits, and travel bags or other travel kits. Okay. All right. So there you go. And I wish you a profitable trading day by the next trading day. Thank you.